Hey you guys, what's going on? It's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you to increase your financial literacy. And before we dive in, if you'd like to see more content like this, make sure you like this video, subscribe to the channel so you get to see more videos just like this in the future. And I'd love to hear your comments below as well. So with no further ado, let's jump right in. All right, so today we're going to start with the Bitcoin TABI chart, and as you can see here, it is still yellow. This just simply means that per all the on-chain metrics that are being measured, Bitcoin is still in a sense of chill. It's kind of in the neutral zone, and it's crazy after the huge move up that we had here back on May 8th, a giant candle up, and then you notice we've just been consolidating here just above that $100,000 level. If you move over here onto the daily Bitcoin chart, you can see we busted through this area of resistance right here. This was the area that we had to work through. You can kind of see it right there on the chart. And we did break through that. We're starting to put in some new levels of volume up here, right under $105,000. So between 100 and 105 right now seems to be this accumulation zone where we're accumulating new Bitcoin. If you're looking to take profits on Bitcoin, we did just have a move from 75,000 up to almost 105,000, a $30,000 move. So that's a giant move up. Doesn't mean that the run is over. It just means we may see it taking a breather right here. You'll notice we are mean reverted to the upside. RSI is above 70 and MACD looks primed for a crossover right here with the global liquidity has been on the rise since January 20th. You notice we've just been on this steady climb up into the right, kind of leveled off over the last month or so. If we move over to the short term, so the 4-hour chart on Bitcoin, and we take a look at this linear regression channel here. So for instance, since the 7th of April, we've had a shift, right? We've had a shift in the actual trend. The trend was down from the all-time high here on January the 19th. We were making a series of lower highs and lower lows until we got here till about April 7th. Since then, we've been making a series of higher highs and higher lows. So this tells us that the regime has changed. There's been a regime shift or a trend shift in Bitcoin when measured on the 4-hour chart. You can see we are tracking nicely up in this channel, just hit the top part of the channel again up here, moved down through the midpoint. Who knows, we may retest the bottom of the channel. The bottom of the channel right now is right at about $100,000. Of course, we have this former strong support and resistance area at 91.5, 91,500. We are coming off of a huge mean reversion to the upside on the 4-hour chart, almost 3 standard deviations above the norm, 2.5 standard deviations above the norm. RSI was as high as almost 82 recently, and we did get a crossover right here on the MACD. That oftentimes signals a sell-off, and you'll note that the price did go down right afterwards. So again, a way to use all the tools that are available to you in TradingView. Note that we never did retest this 89.2 level, this Fibonacci level down here, but realistically, I should reset the fib levels to using this as the low point here in April. So I wouldn't pay a huge amount of attention to that. Our 200-day moving average is almost up to $92,000 right now. You notice that all 3 of the moving averages are converging together. The 50 is about to break up through the 100, and shortly we'll break up. The 2 of those should break up through the 200-day moving average. All of that a bullish signal with Solana. Sorry, with Bitcoin. The Solana Bitcoin pair, you'll note on the Solana Bitcoin pair, we are putting in what's called an inverse head and shoulders. This is on a daily chart. Here's the left shoulder, the head, the right shoulder, and the neckline would be this purple line that I drew right here. Typically, the breakout would be the distance between the head, the top of the head, and the neckline. So this distance that you see me measuring right here, that would be the breakout to the upside. So that puts us at a inverse head and shoulders target of 0.002, we'll call it 0.002, up from where we were down here in these depths down at 0.00125, 0.0013. So that's a significant move. If we measured that from the depths of the bottom down here up to where the target is, that is a 60% return, a 60% return. What does that mean? That means that if you turned around and sold Solana for Bitcoin up here at the top, Bitcoin then outperforms Solana, thus this graph goes down. Down here, you move your Bitcoin back into Solana. When it gets back up to this point here, the move from Bitcoin back into Solana, that gets you approximately 60% more Bitcoin. Had you done it right here at the tip of the head of the inverse head and shoulders, and then reverse the trade up here at the target, if and when we get back up to the target, which we're certainly grinding back up that direction. It could happen sooner, could happen later. We did just see a reversal, though, in the trend. We are starting to make higher highs and higher lows, which is really good to see on the Solana Bitcoin pair. As far as mean reversion or RSI or any of those are considered, we're pretty much at neutral there. If we move over to the Solana chart, Solana daily chart, you guys have seen this for a while, and I did just add a new linear regression channel representing the trend shift that we saw here around the end of the first week of April, right? April 7th, April 8th. We were no longer making lower lows and lower highs. We turned around and we're starting to make a series of higher highs and higher lows. So that represents a trend shift. You see the V, some would call that like a V-shaped recovery, going down and then back up the other direction. So that trend shift right here occurred on April 7th, according to this. We did bottom out on the mean reversion and on RSI back at the end of February. Believe it or not, that was more of a bottom out than right here. So what we call that is we're starting to see more strength on the RSI. We're starting to see more strength on the mean reversion, and thus we're starting to climb back up. We're tickling the 200-day moving average. You can see that here. We are also right on the edge of the linear regression channel that we've been in since January, this downward trend, which is not very, 0.64 on the Pearson's coefficients. That's pretty low. So I'm not putting a lot of faith in this wider, short-term descending linear regression channel. This guy right here and right here. I just tried to mark it with the mark the edges. But this shortest term linear regression channel, we are staying very tightly in. So I'm putting more faith in this short one going up and to the right. Looks like our next stop is to break through the 185 200-day moving average. Also, that's where the 61.8% fib level is. You'll notice there's quite a bit of volume right here where we are currently. We're grinding through this volume. Next, we'd have to get through this bit right here between 185 and 190. A little bit more up here all the way up to 200, and then clear skies up to 215, 217. So looking good for that right now. Great base of support right down here at 150. 150 would be the floor right now from everything that I see with Solana on the daily chart. Moving over to the 4-hour chart, you can see it a little bit better here. If I go ahead and just increase the period of this linear regression channel by a little bit, you'll see that we are staying very tight to this 90% Pearson's coefficient. So call that a 90% correlation within this pattern right here. There's the 200-day moving average that we're beating up against. Same thing with the 61.8% fib. On the 4-hour chart, we are significantly mean reverted to the upside. We're coming off of a 3.5 standard deviation to the upside. You'd have to go back a long, long way to see anything that even comes close to that. So as we let this come in right here, if I put the crosshairs on that mean reversion, you have to go all the way back here to February of 2024 to see anything like that. What happened after that? We climbed from about 135 all the way up to 210 in a matter of just a couple of weeks. So Expect some type of impulsive move continuing to the upside right here. I think a lot of good things are in favor right now with Solana. Again, the resistance at the 200-day and the 185 Fibonacci level, and at the upper edge of this ascending linear regression channel that we're in. Support down here at the 50% fib level at 151, where we've been for a while. Tesla has what was called a gap up. You can see it very clearly here on the daily chart. See how this candle's just floating up in space. It's not connected like the other ones are to these other candles, how it connects. What that means, when you see it floating in the air like it's doing right here, that from the close the day before, which the close is all the way down there. Remember, it's not including the wick. To the open, which would be the top of this candle right here, that is called a gap up. That gap will likely fill. If it does, it would mean a perfect retest of this green line that you see right here. That's the 50% fib level. So you see how all these things are kind of related. You can also see how there's a huge bunch of volume here. We spent a bunch of time there, here, back here. Finally breaking out above this 50% fib level on a gap up. I'd look to see this coming back down and filling that gap. You see we're starting to put some volume into this gap right here. Next big hurdle is going to be up here around 360. That's if we have the VRVP on a shorter term time frame. If we look back at a longer term time frame, you'll note there is a lot of volume here at 340 to 360. It starts at 340, right where the 61.8% fib level is. So that'll be our resistance to the upside, is going to be 340. That'll be significant resistance to get through. Support to the downside at 295 is where I see it right now. And again, not quite enough data, in my opinion, to say that we've really made a regime shift or a trend shift here. If this holds and we keep a higher low, then yes, I would say that holds. If we switch it over here, you can see I did put in a shorter term channel here, showing that higher high, higher high, higher high, higher low, higher low. So on the shorter time frame, on the 4-hour time frame, we have indeed turned the corner with Tesla. We have not filled that gap. You can kind of see it clearly right here. There's no shares that exchanged hands in between here and here. Our current support zone right now on Tesla, the upper bound is around 300. The lower bound is around 285. That's based on the 200-day moving average. That's based on the 50% fib level. That's based on VRVP, a plethora of factors. The previous support zone you see is noted down here. That tops out at around 265. The next up resistance zone is going to start down here at 330. That's almost in line with where the 100-day moving average is. That's what we're beating up against right now, is the 100-day moving average. It's around 325. So 325 to 330 is where that resistance starts. It peaks around 340 and stays there all the way up until about 360, which was support and resistance in late 2024 and early 2025. Next zone would be up even higher. On the mean reversion, we are mean reverted to the upside. We do have right here, you'll see RSI is above 70. MACD still healthy and climbing, so that's showing strength. We haven't seen the crossover like we saw here, which oftentimes signals a sell signal on the confluence indicator. Moving over to MicroStrategy. MicroStrategy, again, you'll notice the same pattern. Peaked back in November of 2024, decreased all the way until here. In this particular case, it bottomed out in March, on March 10th. The April 8th low was not quite as low as the March 10th. So it seems like MicroStrategy is about a month ahead of a lot of the other assets. It started running a little bit more quickly. We have put in a higher low, just barely, but a higher low, higher high. Now we have a higher high. Again, as long as our low doesn't come down past 238, 240, we're fine, which I don't see happening. If you look here on the VRVP, and let's just take a look at the more kind of what I would call more modern history of it, you'll see there's a huge block of volume right here around 393. So That should act as significant support for us. Resistance, there's not a whole lot until we get up here into this 480 to 500 range. There was some volume, but you'll notice the volume, the higher we get, just gets less and less and less. That means there's going to be less and less resistance as we're climbing. You will see that we are mean reverted to the upside here on the mean reversion tool. The NAV premium is right around 1.9 or so with MicroStrategy right now. By the way, that indicator calculates it. You'll see over here we have the mean reversion. We had been mean reverted significantly to the upside. We call this a bearish divergence. So by that I mean, let me grab a drawing tool here. Notice that we're putting in lower highs on the mean reversion. Same thing with RSI. It's angling to the downside. At the same time, the price is climbing up. That's considered to be a bearish divergence, often signaling that the asset is running out of strength, but price action is still going up. Typically signifies that there's going to be a breather soon. That wouldn't be surprising because, oh, and there is a gap up. That's what that is right there. That's a gap up that we did not fill from the close of business on Wednesday, the 7th of May, to the open of business on the 8th of May. So don't be surprised to see MicroStrategy come back down to 390, 395 and fill that gap. This is our current support zone. It does go all the way down to 375. So I anticipate that MicroStrategy comes back down into this zone somewhere, maybe in line with the midpoint of this ascending linear regression channel. If we were to go back down to the bottom part of that channel, we're talking about going back down to the 61.8% fib level or 345. Nothing is impossible. I know that's not always popular. People think things just go up and to the right, but you have to remember, from the bottom right here to this wick, let's say up here, that is an 87% move in a month, just over a month. And to where we are currently, it's a 78% move in 34 days. So that is a massive, massive move to the upside, 180 points in 34 days. It would not be unusual to take a breather after something like that. So I wouldn't be surprised. Mean reverted to the upside like we talked about. RSI still above 50. MACD, the crossover occurred back here on May 12th. So yesterday. Last but not least is Nvidia. So you'll see we have, I'm sorry, we're going to do the MicroStrategy and Tesla pair as well. But with Nvidia, let me just reset this a little bit. You've got a linear regression channel here that we've been kind of working on since back here on April 7th. And Nvidia really benefited from the tariff talks lately. I'll just call it that. You can see we were clearly in a descending channel, respecting the boundaries of it, then respecting the lower half of it all the way back for the last couple of months. April 7th marked the turnaround. Since April 7th, we've been putting in higher highs, higher lows, higher highs, higher lows, all the way up until where we are right now. We're starting to come up and close in on that 200-day moving average, which is right around 125. We are starting to close in on the top part of the linear regression channel, which is around 127 right now. So expect to see some pullback at this point on Nvidia. We gapped up. You'll notice on Friday, we closed on Friday on this candle would be the close since we're on a 4-hour extended chart. That close was at 116.62. And then we opened. The opening candle would have been somewhere hereabouts in the 120 to 122 range. So we gapped up $4 on Friday. I wouldn't be surprised to see that gap fill, just retest the midpoint of this linear regression channel perhaps, and then take off from there. So resistance to the upside, 125, 127. Support to the downside. Don't pay attention to that 120 right there. I can hide that. That has nothing to do with what we're talking about right here, that light blue line. Support would be the midpoint of this linear regression channel, going all the way down to the 50-day moving average, which is down here at 111, 112. I don't see that happening. I don't do the same thing I do with some of the others, but if I put on VRVP, and if we were to take a look at that over the more what I would call modern history here of Nvidia, Yeah, where are we? We're down here. We're going to run into some resistance right here around 127, 128, like I thought. So 127, 128, a little bit of resistance at 132, a little bit more up here at 135, and then finally at 138.40. And MicroStrategy Tesla pair. On the MicroStrategy Tesla pair, you'll note same thing. The pair MicroStrategy had been kicking the teeth in lately on Tesla. A lot of people were wondering, should I have been selling MicroStrategy for Tesla? Should I have been selling MicroStrategy for Tesla? And the answer is yes. I mean, up until this point, you had clear signals to sell MicroStrategy for Tesla. And then down here on the bottom of the linear regression channel, you could go from Tesla back into MicroStrategy. I made a whole pair trading video. I'll go ahead and put the link up here to that pair trading video. And it got an incredible response. People were blown away that you could turn a little over $30,000 into $350,000 and do that over the course of 13 or 14 months with just a handful of pair trades back and forth between MicroStrategy and Tesla. Yes, there's tax implications, but in an IRA or a tax-free account, holy mackerel, it's amazing to do. You'll see that we were significantly mean reverted to the upside. That signaled going from MicroStrategy to Tesla somewhere up in this 1.4 to 1.45 region. We have since tanked on that metric and gone all the way back down to 1.27 and right now sitting at 1.29. What does that mean? That means that for every one MicroStrategy, you'd get 1.29 Tesla shares, simply put. So right now, that's where we're sitting, is right here at 1.29. We are mean reverted to the downside. I anticipate that if Tesla continues to remain strong in relation to MicroStrategy right now in this current time period, we may see this come down a little bit more, retesting this 61.8% or 1.25 level. If that's the case, you may see a buy signal. Even if you don't see a buy signal, everything else is screaming that if you had gone from one MicroStrategy to 1.45 Tesla up here when it was up there twice, right? I'm not even saying you hit the absolute top, just 1.45. Then if you come back down here at 1.25 and turn around and go back the other direction, that's a significant move, right? 1.45, that's 16%. That means you'd end up, if you went MicroStrategy to Tesla, Tesla back into MicroStrategy, you end up with 16% more MicroStrategy than you started with. Pretty cool how all these things All right, work. So I hope you found value in today's TA Tuesday. If you did, make sure you like and subscribe to the channel so that you get to see more things like this. Book a course with me or an individual appointment, right? So that you can learn TradingView inside and out. You can actually learn how to trade, not just learn one or two indicators here and there, but learn how to put it together in a system that works for you. I have an entire course about TradingView and technical analysis, another entire course about understanding options. I've made a pair trading video that may turn into a course here shortly, as well as I offer individual appointments to help you and your family achieve that financial literacy that you're looking for so that you achieve that financial freedom. So it's been a great TA Tuesday. The markets are banging right now, as they would say, right? They're going up and to the right, just how we like them. So make sure you stay tuned to this channel for more just like it. Thanks for tuning in, and we'll see you next time.